Let's start with the mechanics of the overnight swap. A swap is a standard fee, a charge or credit applied to your account, based on the difference in interest rates between two currencies. If you leave a conventional trade open past the daily market close, your broker automatically applies these fees. Over days or weeks, that daily interest compounds, steadily eating into your margin or padding your profit. For the average retail trader, this is an accepted baseline cost of participating in the market. But for observant Muslims and ethical investors, paying or receiving this interest represents an absolute deal-breaker. Islamic finance operates on a strict principle of equitable risk-sharing. You participate in trade-based activities in the real economy, but you cannot generate profit simply by lending out money without taking on genuine commercial risk. This brings us to the concept of riba, or usury. Riba prohibits any fixed, predetermined return for the use of money, which is exactly what conventional interest is. Because a daily Forex swap charges you for the loan of leverage overnight, it is a direct violation of this rule. To capture this market, the brokerage industry introduced a highly advertised solution. You will see brokers everywhere offering what they call an Islamic or swap-free account. The problem in 2026 is that many of these accounts are cleverly engineered illusions. A broker might remove the word swap, but they replace it with a daily charge that fluctuates based on the exact same interest rate differentials. Relying on a marketing brochure is dangerous. To ensure your trading strategy aligns with your values, you have to audit the underlying mechanics of how the broker makes its money. If a broker completely eliminates interest-based swaps, they still have to cover the cost of maintaining your leveraged positions. How do they actually do that without violating compliance? The first thing to understand is that swap-free never means cost-free. Legitimate brokers replace the daily interest swap with an entirely different Sharia-compliant fee structure. This timeline chart illustrates the most common method, the administrative fee. Notice that for the first 3 days, the trader pays nothing to hold the position. Then, on day 4, a flat service fee applied. It stays perfectly flat instead of compounding. Looking alongside, brokers use 2 other methods to balance the scales, permanently widening the bid-ask spread or charging a higher upfront commission. Trading ethically requires shifting your costs from a fluctuating, unpredictable interest curve to a highly predictable, flat mechanical structure. Stripping overnight interest out of the equation radically changes the math behind your risk management. Your choice of strategy dictates whether this new fee structure helps or hurts your bottom line. Consider a high-frequency day trader. If you close all your positions before the daily market close, you never incur overnight swaps anyway. For this style, moving to a swap-free account might actually increase your baseline costs if the broker uses widened spreads or higher commissions to compensate. This split-screen chart demonstrates the impact on a swing trader who holds a position for several weeks. On the left, in a standard account, the profit is slowly dragged down by a compounding daily negative swap. On the right, in the swap-free account, the profit margin remains high, interrupted only by minor, predictable administrative deductions. Choosing the right account structure requires calculating the math of your specific trading style. It is a highly strategic decision rooted in ethical constraints. Before you wire funds to any broker, you have to run your own compliance audit. You need proof that their mechanics are sound. Step 1. Demand independent certification. Look for explicit approval from a recognized independent Sharia supervisory board or an authority like the Accounting and Auditing Organization for Islamic Financial Institutions, known as AAOFI. Step 2 is auditing the terms and conditions. The broker's client agreement must clearly outline the exact mechanics of the swap-free account, with no ambiguous language that could allow for hidden interest charges. Step 3 focuses on the numbers. Verify that the administrative fees are strictly flat. If that fee changes daily based on global interest rate differentials, it is simply riba in disguise. Finally, Step 4. Ensure the swap-free status applies consistently to all available trading instruments on the platform. Arbitrary restrictions on certain currency pairs often indicate a flawed underlying structure. If a broker fails even one of these checks, you are looking at a marketing gimmick designed to exploit your principles. You don't have to sacrifice your strategic profitability to trade ethically. You just need to demand absolute transparency from your broker. This is exactly why FXNX engineered its platform from the ground up to pass this rigorous level of scrutiny. FXNX offers genuinely certified Sharia-compliant accounts. The fee structure relies on crystal-clear, flat administrative schedules, combined with ultra-competitive zero-pip spreads. You can access institutional-grade technology and execute your strategies without compromising your deep-seated values. Open an FXNX swap-free demo account today to test your strategies and experience what transparent, ethical trading actually feels like.